When I spoke to Alan Dickinson, he said something really interesting. It was like, taking losses is easy. The amount of energy involved in running a position for a long time, that's hard. Yeah, I think people think edge is like super complex. I think it doesn't need to be that complex or purely technical. That could be momentum, volatility, trend, relative strength, these kind of components that you can put together into a system. The analyst shouldn't be trading, the trader should be trading, right? That's another tricky process, is knowing when to put your foot on the gas and increase your risk.
Welcome to the Trading Battle, where we bring you insights from the best minds in trading to help new and aspiring traders level up their skills. I'm Jason Shapiro, and today we have a very special guest, Colm Murphy, founder of Unpacking the Markets, a platform that dives deep into trading. This is really interesting for me because I met Colm about 7 months ago and appeared on his podcast, and now the roles are reversed, pressure's on. I've got to try and do as good a job as you did. How are you?
Very good. It's really great to be here. I said it's a real kind of a strange moment too when you were now the interviewer, right? But it's really special as well. I'm really grateful for the opportunity. So it's nice to see you again.
You too. Well, we keep in touch over LinkedIn, and I follow all your posts. And I've seen that your podcast is you've had some really exciting guests on. Your podcast going from strength to strength in the last 7 months.
Yeah, it's just funny. It's hard to gauge when it's subscribers just pick up, but I guess when you're just when you hammer at it kind of consistently with YouTube, it's like things just can pick up if you're posting every week, every couple of weeks. But yeah, I've had some great guests on, and yeah, there are a couple more I think really interesting ones in the backlog. Like I don't know if you've seen this interview with Gary Stevenson on the Diary of a CEO. She said him and
yeah, you've got him, have you?
No. I
was going to say he's becoming a bit of a superstar.
Yeah, he's taking over. Yeah, he's all over media, right? But his mentor in City when he was a trader, I'm speaking to on Friday. So I think that'd be really interesting, because he was, I guess, quote unquote, the best trader in the world. So it'd be interesting to see how you mentor the best trader in the world or how that happens, right?
It's going to be interesting. I'll be watching that one. I also follow you on LinkedIn, as you know, and the posts that you put from LinkedIn with things that you've learned from the content of your podcasts, it's really interesting. So if anyone wants to follow your podcast and follow you on LinkedIn as well, I'd really recommend it because it's very good content. And it's remarkable to me. You've only been trading for 3.5 years, is that right?
Yeah, that's right. Always a passion, but anyway, kind of seriously, only about 3 years ago. And I started via, I think what a lot of people are the same way. A lot of people start buying a kind of system off a very good trend follower. But then you go down the rabbit hole of the system stops working, and then you try other things, and you're hopping, and you're facing all the challenges I think that we can get into that traders face. But yeah, 3.5 years on, I think that learning process was really accelerated by the podcast. Because I spoke to people, some of the greatest traders ever, like yourself, right? You were one of my guests, and and everyone you learn from.
Yeah, no, you really had some big names, and the names getting bigger, and the views are growing. So when you interviewed me, it impressed me. I mean, firstly, you look very young, but the depth of your knowledge and experience, I mean, it really is impressive. I'll be honest with you, because I train traders, so I speak to a lot of people, and a lot of people come to me with 2 or 3 years experience, and they really haven't understood the whole process of trading and building a strategy. And you absolutely have nailed it. There's no question about that. So the first thing I want to ask you really, because I'm guessing, as you said, you've accelerated that knowledge through your podcast and you've interviewed many elite traders. So which one or ones truly changed the way you trade or think? And what exactly did they teach you?
I have to credit my mentor in FX, who was a big FX spot trader in some of the investment banks. But a guest that had a huge impact was Jason Shapiro. Jason Shapiro, he talks a lot about positioning. He's got the credit market report. He just had a huge impact, his philosophy, because up until that point, and even going into that interview, I was all macro. I was super macroed up. I was, thinking every macro risk and turn I knew about, central banks speak and all this kind of stuff. And when I spoke to him, it's funny in the interview, it's kind of like me having an ego death the whole way through. In my eyes, I can see it a little bit, because he really, spoke to the fact the market is the truth. It's not about the macro, and macro people in strong FX macro spaces, they can talk very complicated opinions and they know lots of different things, but ultimately price action is king. And it was leaving Base, who was my former mentor, and really combining what I learned from Jason in terms of the price reaction, understanding the narratives and things that are being spoken about, but combining that with the price reaction and how the market is actually reacting. That for me is where I found my gap is understanding what's going on, but as an observer, not as someone that knows all the answers or tries to know all the answers, and then just observing how the market is, right?
Okay, so that probably helped you with your timing of entering and exiting positions, did it?
Yeah, absolutely. And just having kind of conviction behind an idea, right? Because there's so many ideas and views and opinions. It's like, well, which do you follow and when? And I think stepping back a bit from trying to know which one is right, just observing how people are discussing what they're worried about, what the market's talking about, and then watching specifically, tier one data releases, how different asset classes are reacting. Like today, we had core durables and we had headline durables both beat expectations with an overhang of US economic growth shock in it at the moment in markets. People are worried about US growth. And when we beat expectations on core durables, equities are down over 1% now. So that I find interesting. It's like a little moment where it's combining the macro and the views with what's happened, and it seems a little bit out of sync. And when it's out of sync, sometimes there's opportunities.
Yeah, and it might be telling you that the market wants to go down is the path of least resistance. If it didn't go up on strong economic data, might be telling you something. Now, having watched your podcasts, I know that you really understand that trading psychology is really important. There's a lot of talk these days about mindset in trading. It's something that fascinates me because when I started 40 years ago, no one talked about it. I really didn't understand the concept of mindset and trading psychology until about 20 years ago. So what's one mindset shift that made the biggest difference for you personally?
When I interviewed Stephen Goldstein, he had this kind of perspective about, the analyst and the risk taker, kind of type mindset. Obviously, we could talk about like being a professional and trading as a professional, but if you had to have easy to think about, kind of almost split yourself as a trader when you have the analyst, the person that's coming up with ideas and going through the creative process and passing it to your trading process. Maybe it's looking at different asset classes and coming up with a different idea. And then you have the trader, which is the person that actually executes, right? And the analyst shouldn't be trading. The trader should be trading, right? This is really important for me because I like ideas and different things that are going on, and there's so much. But really, how are you going to make money from it? And that's when the trader steps in. So I think they need to be there together. And I think that I've found as a really useful perspective is, yes, we all need to, do the work and come up with ideas, but then you need to hand it to someone that's disciplined and that's a professional that executes. And I found a lot of utility in that.
Okay, so you have to divide your roles within your own mind.
Yeah, a little bit without getting too woo-woo, I'm not like having, I'm not going borderline schizophrenic here, right? But
No,
but
I know what you mean.
just
Because I do my analysis in the morning, takes me a couple of hours. I figure out, the trades that I think are worth doing. And then I don't really look at the charts too much for the rest of the day. For me, it's about execution, managing the position. So I kind of get that. In fact, I remember I spoke to someone, and I can't remember how long ago it was, but they'd actually decided to physically divide it. One guy did the analysis, and then the other guy did the trading. And I thought that's actually a really brilliant idea. You may not be both good at both things. So identify what you're good at and divide it up. The roles don't overlap. Seem to work for them.
Yeah. And it's a classic adage of, falling in love with an idea. It's quite a lot of people do it. I used to do it. And it's the worst thing because, when we talk about things like moving your stops or, increasing your leverage, these are all kind of like symptoms, but the underlying might be that the real core issue might be your need to be right. And then these moving your stop and things might be just symptoms of that problem. So I really think it kind of helps to mitigate that because the trader doesn't need to be right. Trader needs to make money. The analyst loves the idea. And then, yeah, as you said, two together is quite good.
Yeah, I like that. Yeah. Overcoming the male ego. That's the problem that men have with trading. They want to be right. Okay. So if you had to start completely over again, let's move you back 3.5 years. You've got your laptop, $5,000, and you've got 1 year to make it work. what would your plan be?
Guess if I didn't know anything, and I was sensible enough to not go and make all my own mistakes, which is what I did the first time. Sometimes you have to put your hand in the fire a little bit yourself to believe it. So there's a bit of that too. I don't think I'd be a clear cut. I would start with the Market Wizard books. $5,000 is not going to be, and I hate to burst anyone's bubble with how much money you need to go live as a full-time trader. You need a lot more money than if that's your sole income than $5,000. But again, I would just start with the best traders of all time, understanding the best traders and what they did, what worked for them, starting with the most recent Market Wizards book and going backwards. And as well, get a ChatGPT subscription for every term you don't understand. And if you work your way backwards through the books with that, I think you'll come out the end having a very good idea about what works and what the landscape is, right? What's out there. Because then you need to decide which one is right for you. What trading approach is right for you? Are you a day trader? Do you like trading events? Do you not like trading at all and you want to trade monthly? What type of style is going to suit you? And then, I've probably only burnt, $150 there, maybe $200. I would find once you have that, go and find a mentor and pay him whatever it costs, £200-300 a month to join their community, someone that's done it. Once you found the style that really interests you, find someone that's been successful and then work with them, and that would be as close to perfect as I could do. Is that going to happen? Maybe not. You might just go and do all the mistakes I did, right? But yeah, I think that's a good place to start for people.
Yeah, I love that. That is actually a very, very sensible answer. It amazes me because obviously I've kind of got a mentor role. How many people they come to me and they say, "Oh, I'm having a tough time. Or, I've been trading for maybe 2-3 years. I'm struggling." Say, "Okay, well, I can help you." And then they go away. You never hear from them again. Or they'll come back in a few months. Go, "Oh, I lost another $5,000." I don't understand why so many people don't get that. Getting a mentor, no matter what you're doing, if you're learning a language, if you're a sportsman, whatever you do in life, you accelerate the learning curve if you've got the right mentor. But for some reason in trading, people just think that they can do it by themselves. So, I think if people took your approach, they could save themselves a lot of money just learning. And as you say, you can't just go and learn a strategy from someone because it has to be completely personal for various reasons, which I know you understand, but I'm not sure people understand that. They think they can go out and just find this miraculous strategy that's going to make them a fortune, and it just doesn't really exist.
Yeah, definitely. And I think, but you touched on a great point with that, accountability of a mentor and someone that, what I found is some people I speak to that are in the same place, they haven't moved on from the mistakes that they're continuously making. And, I work with guys in a community now, and, it's about assessing every trade and saying, well, what can we learn? And then trying not to make those mistakes again. I'm not saying we're all human. I've made mistakes, even last week. I opened risk and there was a tier 1 data released the next morning or through the night that I didn't spot. So yeah, we're all human, but it's about, trying to make mistakes as few times as possible and then iterate and grow. Because if you get stuck in one place, as you said, you just keep coming back saying, "Hey Jason, I'm down another 10 grand. Can you help me now?" And then you go away and it's this recycle. Yeah. If you're being stuck at one place.
The definition of crazy is doing the same thing and expecting different results or something like that. I don't know. So it sounds like you're actually slowly shifting into that mentor role now with the experience that you've got. You've got a group going where you're advising people, is it? How do you?
Yeah, I would never call myself a mentor. I don't know. I think I'm just a guy that interviews people sometimes and has some ideas and finds decent risk reward. But for me, it's constantly learning mentor. But there are guys that definitely reached out via the podcast about wanting to learn about the world of FX, the world of macro, pairing that with price action to kind of ground ideas, and then using technical analysis or systematic trade setups. But that's kind of what I think is a nice sweet spot. Because FX in the world of price reactions gives you a context about why things are happening. And a lot of people don't deal with that. It's like, why did it happen and what tends to happen in markets? What happens when we have risk off? What happens when inflation goes up? What kind of assets tend to go up, or geopolitical risk, or risk goes down and then we have risk on? Where should you look then? And having that view on why markets I call it like the plumbing of markets. I think to borrow Scott Besant's term, when he was when he was a hedge fund manager, how things work, and then pairing that. A lot of people reached out about that stuff because I'd spoken about it before, and we don't want to get too far into why things work the way they work, because no one really knows all the answers, right? It could be a lot of different things, but the market has tendencies. I think it tends to move in certain ways. Different assets tend to move when certain things happen, and using that to come up with trade ideas, found some decent success, and people kind of wanting to learn that way, if you know what I mean.
Okay. That's interesting. And you talked about accountability. Is that something that you're also providing, being like an accountability partner?
Yeah, not really. I mean, I'm there, right? And when we have, I wouldn't say I'm counseling these guys. It's like, we have a community where we're kind of all contributing. There's guys that are full-time turning full-time prop traders in there. There are guys that have just started. There are guys that are in kind of the middle of their route. And I think in being there and seeing, me posting every day, or if you ping me about a trade idea and different things like that, I think is a bit of accountability. That's what I mean when you're working in a community of people and there's a standard, you kind of raise that standard or you just leave, which is okay too, right?
Yeah. Okay. That makes sense. It's quite rewarding helping people, and I'm sure you learn from it too. I certainly learned from teaching people. And you think I thought I knew it all, but then you realize other people have different problems that you haven't encountered, and then I have to kind of figure out a way to help them through that. I really enjoy that.
Yeah, it's challenging though, yeah, right? Because I mean, some people more further down the line than I am, and I'm like, well, how am I supposed to help? But you can help just with your perspective, because it's different. Some people just need, they're stuck in the same way of thinking, and they need a kind of to step back, or they're over analyzing, especially kind of more senior traders. As one guy in the community, he's got so many ideas at once, he struggles to find, well, what's the big picture? What's really, what is the market currently kind of listening to and reacting to? So there's ways to work on that as well.
Okay, you find that quite rewarding, I'm guessing, and probably educational.
Yeah. It's enjoyable, right? It's like, I mean, we all love trading, right? We all have a passion for trading. I mean, you've been doing it for plus 40 years. So it's like nothing else would sustain you through that much time without a passion. Right? I'm much earlier in my journey, much less experience, but that's kind of always exciting trading's not always exciting, right? But the markets are quite exciting. So posting about it, learning together, people taking, I guess, helping each other along the way, I find rewarding.
Yeah, I think that you have to have a passion for it, for sure. You can't just do this for the money. It won't work. What's the biggest misconception new traders have, maybe some of the guys in your group actually, about what edge really is? And how would you define it based on your experience?
Yeah, I think people think edge is like super complex, right? Or they think it's like some high frequency trading algorithm, and the more complex, the better. I think especially when you're new, that's really appealing. I was really drawn to that. That's why people get into stuff like ICT or the inner circle trader type ideology. It's super low time frame, complex. Different things are happening for different reasons, and I think it doesn't need to be that complex. I think there are like tried and tested levers to create an edge. If you're purely technical, that could be momentum, volatility, trend, relative strength, these kind of components that you can put together into a system. When I talk about edge, actually, I spoke to someone recently who put it really nicely. If you think about the opposite of edge, which is gambling, right? And what's the definition of gambling? It's betting on an uncertain future. So edge is just the opposite. It's putting rules around an uncertain future that can sway the odds very slightly in your favor. And then you can start to pull the levers that can help. That's where we go back to, like, say, the market wizards, or we talk about someone like Richard Dennis, who talks about pyramiding into positions and trade management and using volatility to increase your size and trailing your stops and not setting profit targets for longer term trend following. Like, lots of things that can be stacked, and then you create an edge. But it's quite simple. It's just a couple of different levers pulled together to make something, a process that has some slight sway in probability.
Yeah, you can't control the market, so you've got to control your reaction to the market and have these processes in place to create the edge.
Yeah, absolutely. Yeah, when people start, they come via, I guess, the idea that, that phrase when you're trading your own beliefs. Like before I started trading 3 years ago, I was kind of dabbling. And one belief I had was when the US economy goes up, the markets go up, right? Our stock market goes up. That was like a predefined belief I had in my head that I picked up somewhere. Generally, when you force that belief on the market, market doesn't really care, right? It's like COVID happened and we had like it was the worst economic time, like one of the worst economic times in history. But because of the stimulus, stock markets rocketed, right? So it's like some of those beliefs, I think when people come, it can hold you back, and it's better to just accept the market as it is. And then you go back to the guys that have been super successful. What levers did they pull? And then, write your own stuff and come up with your own thing, right?
Yeah, I like that. The market's always right. You can't fight it. I've tried. Didn't work. And that's how I learned to be a trend follower, by fighting the trend and thinking when it's gone up too far, I'll sell it. It's got to come back down again. Yeah, that cost me a lot of money.
Oh, absolutely. Yeah, it feels great when it works, but it rarely works, I think.
Problem with fighting the trend was when I did manage to get into a trade that actually started to work. Maybe if I managed to sell close to the high for the day, the profit potential was so small because the market just doesn't come back that much in a bull trend. So you can sell the high of the day, but then you're struggling to actually turn a decent profit on the trade. So it really, I learned the hard way.
It's a great point, right? Because I remember when we were talking on LinkedIn about gold not so long ago, and you had a post up about, gold is at this kind of potential turning point. And I've been watching gold too, because I thought we had a big risk of inflation risk day, and gold closed lower. And as a lot of people know, gold tends to rally when we have, geopolitical risk and inflation concerns. So when it closed down on a day like that, it's something to be noted, right? But for the same reason. So I was short gold on that. I'm sure you were also short gold. But interestingly, the better trade was actually once that sell-off kind of slowed down into the mean, it was right in the middle of the, say, 1 ATR, or a nice kill zone for a trend follower to bounce it higher. And that was the better trade, right? Which I didn't take. So it's a great point by you that, be mindful of what kind of trade you're in and what the higher time frame trend is.
I remember that actually myself, and I think I did catch a short, and I think I did buy into it at the support level because I have to, because I'm a trend follower. But yeah, the bounce was a lot quicker than the move down, and it was relatively easy money, having watched it move as expected, but so slowly.
Yeah, that's a difference in experience. Now you can sell it and buy it back, but I just sell it and then I didn't catch the real move.
I'm not saying I do that all the time. We talked earlier, and you said how the US stock markets have collapsed 1% on a relatively positive data release. So that's just another example of what you're talking about.
Yeah, absolutely. I mean, I find US equities are real buyer beware when it comes to shorting stuff. I think, shorting US equities is a very difficult game to play. Shouldn't be done lightly, but there are moments, again, as we said earlier or off camera, where the risk reward is in the other direction, and I'm not sure it is right now. When the equity market is concerned about US economic growth and we get positive growth and then it sells off, I thought that's an interesting moment.
Okay, so we talked about dividing the process up between your analysis and then your trading. So what would a typical day for me? As I said to you earlier, I'll spend an hour or two looking at my charts and then I won't need to look at them so much because I look at the 4-hour chart anyway. So there's not that many more bars to look at during the day. What does a typical day look like for you?
It usually starts on the weekend for me. I do kind of a more in-depth session on the weekend. Kind of 3 major things for me with coming up with ideas. Sitting down and thinking about or reading through what's being said often, or what the market's concerned about, and things like Bloomberg, and basically what are people talking about, right? And then acknowledging the plumbing as we know it in the market, how it tends to react, and then watching how price reacted during the week to major data events. That's kind of my initial process for coming up with ideas. That'll give me a bias, right? We had the Bank of England hold their rates, right? And sterling actually closed lower on the Thursday. So heading in, that gave me a bearish view on sterling. And then once I have a view on a currency or an individual currency or multiple currencies, and then US equities or bonds, I'll start to see how can I express that idea, come up with different, and then I'll go to charts. Like I'll look at technical analysis and trend and, as I said, momentum, to try and find trade setups, so like predefined technical trade setups, and try and find an entry. And then really the week is about executing. So I like to open trades on Monday evenings, just because it gives the weekend news a little bit of time to relax and kind of absorb. And that's it. Then end of day, it's like what's happened today, a quick review in the community, and a view on the price reaction, and then I go to sleep and wake back up.
So how long are you holding trades for? It sounds like you've got your, you've explained how you've got your plan for the week. You've got your view. You'll look for setups that match your sort of macro opinion and maybe confirmation as well. As you said, you saw sterling moving lower and you figured. So how long, what would your trade duration be? How many trades would you do during the week? And would you change your view during the week?
Absolutely. Yeah, I would. I'd change my view in a heartbeat. So I'm very pro Peter Brandt, who would say, or I think he says, strong opinions loosely held. I'd have, if I see a price reaction like up until today, I saw no reason to be short equities. When I see a sell-off today on a reaction like that, given the backdrop, I'd absolutely drop a hat and change my view to short equities. So yeah, it could be anything from 1 day to 2 weeks plus, unless something changes, right? Because for me, the view is true until it's not true, right? And until I see a reaction in that asset that tells me, that's no longer true, or the edge is gone, and then I'll just continue to trail that trade. I think one thing I've learned from the likes of Turtle Traders and Richard Dennis is, you never know how far a trade is going to go. So, starting a trade on, say, 1 unit of risk, and again, as long as the view and technicals are still sound, that you trail that, and you can even increase your risk as the trade is going towards you, but never before it starts going towards you. So I'm very pro, trade is on, give it some space. Don't start moving your stop anywhere for a couple of days. If we get, a 1 ATR or half an ATR move in your favor, then another half an ATR, maybe you add a unit of risk. And then again, I'm constantly watching just how is this asset reacting to what's happening. What happened when we had when FOMC, or we had lower CPI? If you were long Eurodollar, what did Eurodollar do? Does that invalidate your base case? If no, then continue on as is, right? So if it's a big event, I'm happy to. I think it can be sensible to reduce risk into big events. Yeah, absolutely. But yeah, I try and hold things and give it room.
Okay, that's interesting. So you don't get married to an idea. You're not stubborn. You're very flexible, prepared to admit that it's time to get out. But you are pretty good at holding positions when things are working, things are lining up, and there's nothing to challenge your view. And you'll even add to the position if it's working, and you don't trail your stops too aggressively either. You sound like you're very composed when you have a position on.
Yeah, sometimes. Well, I mean, yeah, we had Rachel Reeves today in the spring statement in the UK budget, spring budget. I thought it was quite bullish GBP, so I closed GBP. So it's not always. I'd like to say I'm kind of trailing things and trying to step back and let the trade play out. But there are times definitely where I intervene and almost force my opinion on the market, which I know, which I'm working on, right? Ideally, if the market is telling you and all the price reactions are aligned to your view, then just why would you close that position? Just give it room, trail your stock with I like to use volatility stops, a multiple of ATR to lock in some gains, but again, give it some room, and don't start trailing until the position's in some kind of profit, right? Because I can't remember his name, one of the market wizards that used to, that would wait 3 to 5 days before moving his stop loss, right? Just give it some space. But everyone wants to get to break even quite quickly. It's like, well, it's okay, just give it room, because a lot of these trades can work. And to be honest, I've been working on some systematic strategies. That's one thing I'm coming across is wider stops if you have to implement a system, create a better P&L in the final system, wider stops and adding to the position as it goes in your favor, not trying to take profit off quite quickly, things like that. It's interesting when you see it in the system because you want the system's behavior to improve and you're thinking, well, back to when we started, how can I make the system better? And that's how can you make your trading better? It's the same thing because the system's just trading over and over again. Right?
Okay, that is interesting. So, it's a big problem for most people is running their trades. I'm not even saying that I'm particularly good at it. I set targets. I have a different approach to you. I'll scale out. So when that anxiety kicks in, when you've hit a certain point and there's a sum of money in the account where you're thinking, I've worked hard for that. I really don't want to see that evaporate. And the anxiety kicks in, and then that's when stupid decisions can start being made, certainly by me. So then I start scaling out. But you're kind of doing the opposite thing. You're thinking, no, I'm right. This is working. This was my plan. I'm ready to add to the position now. So I like that. That's it's an interesting skill and it's a great idea.
Yeah, I said it's great in theory. I'm not perfect at implementing it. I'm also like that, where my anxiety kicks in. And it's funny when I spoke to Alan Dickinson, he said something really interesting about running positions. He was like, taking losses is easy, but he was like, the amount of energy involved in running a position for a long time, that's hard. And when he said that, I was like, oh, it doesn't make sense, right? You're winning. Yeah, you're winning. So why is it hard? But it is hard because when do you take it off? As in, it's easy to take it off there, but then you're like, when do I put it back on? Do I put, it's difficult. So yeah, I'm not perfect. I get that anxiety too, if I'm honest, but I'm trying to make some of these changes and seeing what the impact is.
That's a really good lesson. Yeah, it's definitely something that I would like to be better at. Probably do lose more energy running positions because the thing is, you're up X amount of money and you see that as your money. You don't see that as part of your P&L. That is my money. It's in my account. You don't, you can't just say, oh, well, I was up $1,000 and now I'm only up 200. So what? That's your money. And, you will have an emotional reaction to it. So, yeah, I suppose what Alan was saying, Dicko, I mean, I know him. He's a very highly respected trader and was one of the first traders on Life. So huge experience. And yeah, as I say, very, very well respected. So it's a really good point. You're probably expending more energy on running those positions. And maybe your anxiety is even higher because when your stop loss is hit, it's like, okay, done, stop loss hit, I'm out, move on to the next. You shouldn't nurse a loss. You should just hit stop loss and you're out. If you don't have a stop loss, okay, then you're in all sorts of trouble. But that's a different conversation.
Yeah. I remember the other thing he said was about, and he's a great clip that it's like, sometimes it's time to step on the gas. And that's another concept I think I don't hear many people talk about, because a lot of people associate it with gambling, sizing up a position. I think there's a couple of people talked about it in podcasts recently, some of the bigger podcasts. But yeah, some of those outsized returns come from high conviction bets. And that's another tricky process, is knowing when to put your foot on the gas and increase your risk.
Yeah, I like that. I'm a believer in the, what is it called? The Pareto theory, where you make 80% of your profits from 20% of your trades. Well, in order to do that, you need to put yourself in a position where you can make 80% of your profit from 20% of your trades. So yeah, that's a great point. You need to be able to step on the gas maybe when you really, really have conviction and the stars have aligned. Don't be afraid.
Yeah, 100%.
I like that. It's really, really good point. Something that I need to work on. I knew I'd learn something today.
I don't know. You were one of the people that had an impact on me as well, right? One thing I remember you said that really stuck with me was about when you made a huge amount of money and you took that trade with you to your next trades and ended up losing a portion of that money. I thought, you were one of the many great traders that had said something like that to me, that it's not just about being a good loser, it's also about being a good winner. And some people associate winning as in, no, that's great, but in trading, some of the guys like yourself, you've been great examples of sometimes a winner can put you on tilt too and can impact your next trade if you don't let it go, right? So I think that's a great lesson.
Yeah, it's a good point. Not carrying thoughts and biases from your last trade onto your next trade. Well, there was a saying on the floor that you're only as good as your last trade, and it's true, isn't it?
Yeah, absolutely. Yeah.
Colm, I really enjoyed that. As you can tell, it's always good talking to you. I knew I would learn one or two things. I've no doubt our viewers will have really got a lot to think about. It really was an incredible conversation, raw, honest, packed with valuable insights. If you found this discussion valuable, don't forget to like, subscribe, and hit that notification bell so you never miss an episode of The Trading Battle. And of course, share this with your fellow traders. We're building a community of like-minded individuals who are serious about improving their craft. Thank you for tuning in. Wishing you all the greatest success with your trading and steady hands in the markets. Until next time, it's Jason Sen for The Trading Battle.